Hey everyone, so a couple of weeks ago on our Q&A live streams in Learn by Example, a student asked me a question about finding great businesses at cheap prices when the overall market is expensive, when businesses are doing well, which generally speaking seems to be the case at the current time and has been for many of the past 10 years. So in today's video, I thought I would share some of that live stream with you so that you can see my answer to that question, as well as get an insight into what we go through week by week on these Q&A live stream sessions in Learn by Example. In the community, we do a 45 to 60 minute live stream every single week at different times for different time zones, and you have access to 35 plus hours of past recorded and searchable Q&A sessions. Yes, they are searchable. You can use the search engine and search for any of the questions that I've answered for students over the past 2 years. Now, I'm actually not taking any new students at the current time. However, if you are interested in joining the waitlist, then make sure you click the link in the description below. It'll be the first link. Enter your email and I'll send you an email in a few weeks' time when there are more spots available. Also, you'll notice that I blocked out the live chat from today's video just to protect the privacy of some of the students. But with that said, I hope you guys enjoy today's video. Do you have any examples of some business cycles that are not directly linked to the wider business cycle? That is a really good question, and yes, I do. The RV cycle. And the reason why I know this is because I've watched it very closely, as Thor is my biggest investment. And that's a question I get not that often, but it's a really good question, because the first thing that you'll see when you're investing in the markets is you'll see that there's clearly these big cycles, right? That every 5 to 8 years, some catastrophe happens either in the financial institutions or in the broader economy, or, in 2020, it's health-wise. Something messed up happens that just messes with businesses, makes everything go out of whack, and businesses go down and then they rise up again. And everyone can kind of see that, but it doesn't happen very often. So it begs the question, well, if that's our only opportunity to invest in really great businesses at cheap prices, then I'm going to be sitting in cash for the next 5 to 8 years. And then I might get a brief opportunity, like in 2020, we got an opportunity for like 3 weeks or something. It was very, very small. So it begs the question, are there other opportunities to invest in businesses? And there is, because not all businesses all businesses are affected by those broad economic factors like the pandemic or like the GFC, and most businesses are affected by them. But within each industry, they also have their own cycles. And some are very vicious. They go up a lot, they go down a lot, and we call them cyclicals. And Thor Industries and the RV industry is a cyclical industry, so it's very sharp. And you can really see the movements of that industry quite deeply. With other industries, it's not as sharp, but I can show you. All right, so there's a couple of things to see here. The first is that basically from the end of the start of the cycle for the RV industry was in line with the GFC. So in 2009, credit froze up. It was very hard to get loans as a consumer. And that alone just crushed the RV market. Most people buy an RV on financing. So they get a loan, like you would get a car loan, for example, or if you buy a boat, you get a boat loan. So as a result, when there was very little credit liquidity, which basically means it was very difficult for consumers and businesses to get access to funds, no one was really willing to loan. Everyone was kind of looking at their own, all the banks were looking at their own books and seeing what their exposure was, as opposed to looking to take on, to get more, to give out more money. And as a result, the RV industry got smashed. Then from 2009, 10, 12, credit started to improve and the industry saw higher revenues. They did 2.3, 2.6, 3.2, 3.5, 4 billion in revenue, 4.5, 7.2. And then what happened was people got euphoric basically there was a lot of demand in the retail RV space. And this peaked in 2017. So in 2017, there was a huge influx of people going to dealerships and buying RVs for one reason or the other. And the dealerships, they ran out of inventory. They got really, really low. So their lots, you can just think of it as like a car lot, I guess. And they were really low. So they had to go to manufacturers like Thor Industries and order a bunch of RVs. They were like, hey, we're running out of stock. We need to order a bunch of RVs. And that also led to businesses like Thor Industries being very low inventory as well. And their orders went through the roof. But basically, there is a figure called RV backlog, and it basically shows the number of orders that the retailers are putting in with manufacturers. And this peaked in 2017 and in 2018. And then what happened was the demand just did not meet their expectations. So in 2017, it was a record year. Clearly, look at how much the revenue grew. It grew by a ridiculous amount. And dealerships expected that it would continue over the next couple of years. And it did a little bit, but then there was no demand. And all of a sudden, the dealerships went from having no inventory on their lots to having too much inventory, where they were not needing to buy more from businesses like Thor Industries. And there was a significant drop-off in their revenues. And I think we can have a look at the industry. If I can try and find some industry data. All right, so you can see this top line here. This is the wholesale market trend. So this is in the US or in North America, all of the orders for the industry in any particular year. And you can see that over time, it does trend upward. You can see it's going up. Excuse me. But in patches, it has these dips, right? So in 85, there was a dip. Then in the early 90s, there was a dip. That was a recession. And, then it went up for a number of years. 2000, there was a recession, bit of a dip. Big dip in 2009 because, as I said, credit froze up. So people just couldn't buy RVs. And then we can see here that there was another dip, but this dip wasn't in line with a recession. There was no recession in 2017 to 2019, yet there was a significant drop-off in the number of RVs that were ordered. Are these in units? Yeah, so that's 500,000 units down to 400,000 units for the industry. And what you can actually see is, when was this presentation made? I'm not sure if this is actually accurate, but I think 2020 was in fact higher than 2019. So it's not, I guess it kind of is in line with the broader market cycle, but it clearly dipped before the rest of the industry. And the result of that was that the stock dipped before the rest of the market, right? The rest of the market had this dip in March, but look at this dip. It happened way before for Thor Industries. So that was a case where I was able to invest in a business around here significantly, and then again further down here, before there was even a recession. Like every other business was ridiculously expensive throughout 2019, but Thor Industries was quite cheap. So that's kind of a situation where it doesn't quite line up, but the cycles don't always line up. Sometimes they have dips before, and that will happen often with some businesses that go through short product cycles. So what's an example of this? So something like Take-Two Interactive, I think it's called. Take-Two Interactive, I think they go through some big cycles. Yeah, so Take-Two Interactive, they make video games. And basically, if you know the style of video games that they make, for the most part, for their big games, they make games like Grand Theft Auto and Red Dead Redemption. And these games don't come out very often. They come out every 8 years. It's not a yearly cycle like some other games. They do have some yearly games because they have the 2K series, so NBA 2K and all the other ones in that series. But for their really big games that make them most of their money, they don't come out very often. So you have these cycles where they go through patches in earnings, and you can see they actually go through this is just the last 5 years. They've gone very wavy because they go through periods where they make a lot of money because a big game is coming out. And then they have a patch where there's no big game coming out. And then a couple of years later, there's a big game coming out and their earnings rise up again. So that's another example of one, I guess. Mike says, the 1 in 1,000 year event, but there's about 150 different types of them, so they crop up every 5 to 10 years. That's exactly right. That is exactly right. You see something happen to a business and you think that will never happen to other businesses. And it's true. That exact event probably won't, but there will be something else that happens. There is always stuff going on in different industries to different magnitudes, right? Like if I just think of the restaurant industry, what things have impacted the US restaurant industry over the past 5 years, for example, the biggest thing that comes to mind that was a shock to a lot of people was the E. coli outbreak for Chipotle restaurants, right? That's something that does not happen very often. It's very, very rare that there is a significant outbreak of a very dangerous virus or disease, I should say, that spreads across a vast number of restaurants. That was very rare. And it is true, that's not going to happen very often. But there will be other things that happen. The whole industry was hit with labor inflation. Labor prices just started going up because there was no more employees and they had to pay up to get the new employees to meet the demand for their restaurants. So there's always things going on. E. coli outbreak, probably not going to see another vast E. coli outbreak ever again, but well, at least for the next few years, I should say. But there might be a different type of disease outbreak, or there might be, I don't know, there's a lot of things that could happen, right? There's a lot of just different things that you could not possibly predict that could happen. And instead of trying to sit there and think, what are all the things that could happen? And trying to just guess that, you understand all of the things that could happen, just invest in businesses where if that happens, it doesn't matter. Because if you were invested in Chipotle, as much as it sucked to see the stock price get slammed and all of your restaurants closed a lot of them shut down for a really long time, you were fine as an investor. The stock's higher than it was back then now. So, and that was because they didn't have that much debt. They were a really solid business in a good financial position. So I just kind of take the position, if you're investing in something, even though the worst case is probably not going to happen, invest in businesses with low debt so that if that does happen, you're not totally destroyed in that investment. Protect your downside first and then look to the upside.